Alrighty, traders. What's doing, guys? What's doing? I have just finished a workout this morning. Lately, I've been doing for my workouts anyway. Lately, I've been doing F45 workouts. Oh, actually, I've been doing F45 for a few years now. Man, it's hot in here. Hot like a bitch right now. Let me turn this aircon on. And so. Let me just do this here. And yeah, so I've done a workout. I work out almost every day. It was actually interesting. I never used to work out when I was younger. But ever since gone through my cancer, it was actually 2008, 2009, I actually went through cancer. And no, the market didn't give me cancer. It was my own bullshit. Anyway, I'm just very, very thankful to be alive today. So I've just come back from there. I've just finished having a drink right now. And now I'm off to do a cryotherapy session for some recovery. And so that's what, and then I'm gonna get back and then I'm gonna start looking at the markets more as well too. So that's most of my days is that I get up first thing in the morning and then I do some trading. Mainly because I'm in Australia, so I do basically half an hour, maybe an hour of looking at the markets. And then that's all I need, you know what I mean? That's all I need to do, because there's nothing else to do there. And then I go off and do my other stuff, like working out and doing stuff like that. And then I come back home and then I go out, work out, so on and so forth. And then I come back home to then also sometimes spend some more time looking at the markets. And then later on at night, I'll start looking at the futures market and so on and so forth. So because I have two styles of trading. First thing in the morning when I get up in the morning, that chunk, that 1 hour, sometimes even half an hour, like this morning it was half an hour, because there was literally nothing. I have a scanner that scans through the markets, and then I have a set of stocks that appear in the scanners, and I go through those stocks, and if there's no trades like there wasn't today, then there's nothing for me to do. I think that's always the hardest part, right? The hardest part of trading is a lot of people have the hard problems, they simply just sitting there and not doing anything. So that my trading through that is just looking for the short-term trades. What I call short-term, they're going to be in it maybe for a few weeks, maybe even for a couple of days. And then later on this afternoon when I get back, or after I get back from my cryotherapy session today, I will then start looking at the markets more from a macro point of view, looking at what's happening from a point of view of what's happening macro-wise, and then make sure that I'm positioned, or if I need to add some more or something like that to my portfolio of investing positions, right? Because right now my investing positions are I've got an S&P 500 position, I got a Dow Jones position. I recently entered the Dow Jones. The S&P I got in a few years ago. I'm in gold right now, and I'm also in the GDXJ as well too. Most of you guys would actually know that when it comes to those positions there. Those are the big markets. The gold position and the GDXJ position are more for like this entire decade, because they are going to me, my opinion, they're going to make some incredible moves. I don't know when that's going to be. It could be starting now. You know what I mean? It could be a couple of years before we start to see that. But I truly believe, especially when the GDXJ, the junior miner stocks, the way that chart's setting up, I truly, honestly believe that chart itself. And God, I'm looking good today, aren't I? Looking all fresh. God, I'm looking good today. So I honestly believe that if you think the Bitcoin moved, you think Bitcoin was big when it went from 10,000 to 60,000, you ain't seeing nothing yet. You wait till inflation really kicks in. Now, inflation's probably likely to maybe pause for a little bit or something like that for a little while, but we're only just getting started with the inflation. This entire decade, guys, is going to be the inflationary decade, right? We haven't heard the word inflation in goods and services for a couple of decades, you know, back from the 70s. So this decade's going to be that. Plus, what's happening from the New World Order coming to the end of the debt system. What's going to happen to gold? Those two markets. I just You watch. Mark my words. So anyway, Now, from a trading perspective, you have to learn actually how I actually trade the markets. Then go to Johns, JOHNS, freetraining.com, jump on my next webinar. And on that webinar, I'll share with you the exact pattern that I use to look for good setups, how I scan the markets and so on and so forth. So go through there, you'll be able to get all that on there, right? But then my S&P 500 and my Dow Jones position, they're more for the next 6 months, 6 to 12 months. That's more like this year, you know, maybe a bit longer, but they're not hold. I see a massive blow off top, especially when there's so many monkeys on my YouTube channel and a few little princesses, right? A few little princesses. I see so many people out there that are just seeing these markets from a negative point of view, and the markets don't operate the way that you think emotionally. You think, oh, this is all bad news, the market's going to crash. It's most of the time it doesn't work like that. You know, like if you see, like if you go back to, like, people think, oh, we're going to go to war, then that war is going to then, oh my goodness, the war is going to crash the markets. What happened? When did we go to war in Iraq? When? 2003. When was the bottom in the market? 2003 to 2007, 2008, that's when we had the boom. 2003 was the bottom. When we went to war. So if we actually go to war, that's going to buoy the stock market even more. If we actually did go to war, right? So that's what's happening, right? So it's important to stress test these thoughts in our life, right? We need to stress test our thoughts in our life. And guys, I made this mistake so many times. I made this mistake even when Trump was being elected. Right? When Donald Trump was being elected, I made this mistake as well too. Listening to all the... If you're around when Donald Trump was being elected, oh my goodness. Whoa. The market's gonna crash. It's all over. Woo. Everyone was saying that, right? But then I come to realize that, hang on a minute, no matter what the public was saying, that's actually a good thing, because everyone was saying Donald Trump's going to be elected, he's going to crash the markets, all this sort of stuff, right? So all this sort of stuff, he's going to crash the markets, and then at the exact same time, the whole Brexit thing was happening. Oh my goodness, it's going to crash the markets. That was so negative at that time. What happened to the stock market? We went through a massive run for 12 months. Massive run for 12 months, right? So because we went through a massive run for 12 months, off the back of what? So much negative news. Apparently, it was negative. So that's the big thing there, guys, when it comes to these markets. Okay, the reason why trading or even investing is actually so difficult for a lot of people, and this is hard for me to even understand from a macro point of view. I've always been a good trader, right? You give me a good, when it comes to trading for income, I'm the shit. I'm the man. Come from a macro point of view, from an investing point of view, that's where my last 3-4 years have been a big, massive learning curve. Understanding this. So that's where I now understand what's going on right now, because I went through the 2008 crash and I didn't understand it. I went through the whole Trumpy thing and all sort of stuff, and I didn't understand it. Now I understand it, right? Because I see and again, the more fear in the markets, the more we're actually getting ready towards the end of the markets, right? And that's why I'm seeing so many people right now being so negative across the markets. Like, oh my goodness, like the markets are so negative. It's like, guys, please, it's not about ego, right? It's not about ego. It's like, how do the markets really operate, right? If you think about it, people think, oh, this is so bad. Again, like interest rates. When interest rates start to rise, we're getting towards the end, but that end is maybe 12 to 16 months down the road. Maybe. Right? So that's where like the whole interest rate thing. Okay, so please stress test your thoughts when it comes to that, and look at it, because I like a lot of you guys right now in the same situation was when Donald Trump was being elected. So many people like, oh my goodness, this is going to be so bad, it's going to crash the markets. And then the whole Brexit thing happened. You should have seen that. Oh my goodness, the futures market. Oh my goodness, guys, the futures markets were down like as soon as the whole Brexit thing happened, right, the futures were down like 7% in one night, right? I think it actually went limit down, which limit down simply means like the circuit breakers kick in at a certain percentage and they shut it down for about 15 minutes or so. Then they reopen it, and then if they have to kick it in a few more times, and then they actually shut it down from there, right? So that's actually I went through all that, and I was listening so much emotionally to the herd mentality, right? This is the top in the market, and guess what? Even people like, Carl Icahn, surely Carl Icahn, legendary trader, investor, surely he knows, and even he was bringing out warning signs and so on and so forth, right? But guess what? The only person was saying, don't worry about it. We're still in the middle of the cycle right now. Who was that? Ray Dalio. He was the only person. Now, he wasn't coming out in the public as much as he is now, saying that. But I heard an interview with Tony Robbins. And Tony Robbins was saying, at that time, or he was saying about 6 months later, he was actually saying that during the whole Trump election and so on and so forth, that Ray Dalio was saying, don't worry about it. We're in the middle of the cycle right now, so don't worry about it. And then guess what happened to the market, right? Absolutely just crazy boom. Just crazy boom. And so that's actually what happened to the market. So right now, what a lot of people are thinking is it does not create tops in markets. Okay? Think about this for a minute. What creates tops in markets? Euphoria. Thrill. This is going to $1 million. Why did Bitcoin top at 70,000? Because the whole world was saying this is going to $1 million. The whole world was saying, I made so much money from crypto. I'm crypto this, crypto that, crypto this, crypto that, crypto this. That's the reason why crypto has crashed. That's the reason why it's down 50% in 1 year. 6 months, maybe 2. Shut up, John. Dislike. I don't care. So, you know what I mean? So the whole thing about that, is that that's the herd mentality at tops in markets. Right? So we're not getting that in the stock market. We're nowhere near the top in the stock market. We're not getting that. So if you want to be a smart investor and actually make money from the markets, look at the markets from a herd mentality perspective, and you'll see that. My last video that I did yesterday about the stock market, every single comment, even today, my market update that I did today. Well, I haven't actually seen the comments. I saw one comment on there, and people are saying, "Yeah, I still think we're at the top of the markets. I'm reducing my position." Right? So, and like the video that my market update that I did yesterday. Guess what? Every single person is saying, "This is the top of the market. This is the top of the market." It's like, no, we're not there yet. Too many people are negative. Tops in markets come from optimism, thrill, euphoria. This is going to $1 million. Why did Bitcoin top out at 70,000? One, because it went from 10 to 60 in 1 year. Like, that's an extraordinary move, right? 600%, right? Extraordinary quality move. But secondly, because the whole herd mentality was crypto, right? I made millions of dollars trading crypto. I made this much money from crypto. It's going to $1 million. Here we go, etc., right? Guys, I'm only saying this because I want to help you. I want you to do really well from this. This is the lessons that I've had to learn in the last 17 years. And that is the big lesson I really want to share with you here. Is even if you don't think about anything else that I've just said there. And man, it's going to rain. Damn. I want to go for a walk this afternoon. Get my vitamin D. I normally go for a walk every afternoon. But anyway, I want you guys to do well out of these markets, okay? And I want you to understand one big thing out of the markets. Bottoms in markets come from major fear. Tops in markets come from major greed. And again, guys, you saw, and again, I know I said this a few times, but you saw this happen with Bitcoin. And so if you just look at the herd mentality of where we're at right now in the stock market, is it A, major fear? Or B, is it major greed? This is going to $1 million. Oh my God, the stock market's booming. The market's going crazy. Here we go. That's the facts of the markets. anyone prove me wrong of how that's how the markets work? Right? That's exactly how the markets work. When there's so much greed in the markets, and everyone's saying that this thing can only go higher, guess what? We're getting very, very, very close to the top of the markets. When most people out there are saying, oh my God, this market's gonna crash, major fear, guess what? We're at a major bottom in the markets. This is a big thing, the reason why a lot of people struggle with trading, because it just doesn't make sense. Major fear should equal major crash in markets. It just doesn't, right? Think about the whole 2008 crash. When did Lehman Brothers go under? Towards the end of 2008. When was the bottom? The end and start of 2009. See what I'm saying there? So after the Lehman Brothers collapsed in 2008, we're getting towards the end of the bottom in the stock market. Again, this is a hard thing for people to comprehend, but and this is the reason why most people because most people are sheep. They follow everyone. And because everyone's saying something, well, everyone can't be wrong. Well, that's the thing that's the reason why the stock market exists. 90% of the money, 90% of people out there, when it comes to these markets, are wrong. But if we can start to be like, okay, most people are saying this, that's what gave me the confidence to come out and do a video 2 weeks ago when S&P 500 was at 4,200. When the S&P was at 4,200, I'm saying, here we go, guys. We're getting very close to a bottom. And guess what? We actually bottomed that day. We actually bottomed that day. And then the market took off. Right? Why? Because I knew we're getting so much fear in the marketplace. We're getting so close to a bottom. I could tell that. And guess what I was actually doing? What I've already said. I've been buying the hell out of the market. Anyway, so I hope this helps you out today, guys. The big thing I really want you to understand is the market cycles and how the markets really work. When there's major fear in the marketplace, that's where it takes a strong person. If you're a weak person where you just want to follow the crowd and fit in with the crowd, and your emotions get involved with your view, major fear doesn't equal crash in the markets. Maybe a short-term uncertainty, yeah, right? But the market comes racing right back, right? The market comes racing right back. So remember, guys, the big thing here, once again, and I really want you to understand this, and I know I've said this a few times, but check this out. Major fear in the markets equals major bottoms. Major greed in the markets equals major tops.